Okay, good morning, everyone, and welcome to BDO's Global Mobility webinar. I'm Andy Kelly, a partner in BDO's Expatriate tax team, and alongside my colleagues and a guest speaker from ITX, we'll be covering some key areas in relation to global mobility. So just to give you a very brief summary of the speakers and the running order for this morning's webinar. We've got Laura and Leslie who will be covering the right to work for international remote workers. We're very kindly joined by Simon Davies, a guest speaker from ITX, to give an insight into global employment companies and their resurgence over recent years. BDO and ITX have actually been collaborating and implementing global employment companies for our clients, and Simon will give a perspective on that. And then we have Lee, who will be updating us on developments in social security for teleworkers. We have time allocated at the end of the webinar for question and answers, so please do type your questions and we'll pick these up in the Q&A section. So at that point, I'll hand over to Laura and Leslie to start their part.
Thanks very much for that, Andy, and good morning, everyone. As Andy mentioned, I'm Laura Burton, and I'm a director in the Expatriate tax team here in BDO UK. And I'm absolutely delighted to be joined by Leslie de Boyce from BDO Belgium, who's one of our immigration specialists. Today, we're going to discuss the right to work for employees working remotely overseas. And whilst the concept of remote work is now well embedded for most organisations, I think it's fair to say that the right to work aspect continues to present challenges for employers. For example, who should be actually responsible for making sure that the employee has the right to work in the overseas location? Who should bear the cost of any professional advice or actually making the visa application? And finally, how is the position appropriately determined and then evidenced? Leslie, thank you so much for joining me today. From a remote working perspective, I think what we see as being one of the most popular reasons for an employee request at the moment is the workation. And I'd be really interested to hear about your experiences from a Belgian perspective.
Yeah, we see certainly a growing trend to go for a workation, so going on holiday but still working. That can be a combination of leisure and remote work in hybrid locations. So this is a popular option, I would say, done either right before or after the holidays. Workation seems to be a growing trend also since the COVID pandemic, and certainly popular, I would say, in areas with large expat communities, such as also Brussels, with the European institutions being present. So we see expats traveling to their home country and extend it to the workation, but we also see Belgians often work in their holiday destination in summer. For example, France, Spain, where the weather tends to be better. So they go on vacation and they add a couple of weeks of working to their holiday home. Now, of course, from an immigration point of view, that is most of the time not a problem when they are staying within the European Union and it is for a limited time. We obviously must consider always wider tax and social security obligations at the same time. But I would indeed say yes, workation is popular, and I would say I would expect this to be similar for the UK. For example, UK citizens traveling to the European Union, to their home country or just for vacation, and wanting to extend it with a workation. But as the UK is no longer part of the European Union, it is of course more complex. I think, yeah, you could say that UK nationals in principle need work and residence permits to work, for example, in Belgium.
Yeah, that's definitely an interesting aspect to this in the post-Brexit world, and I guess poses the question of how companies make sure that the position is fair for the entire workforce. We do spend a lot of time in the expat world talking about tax equalisation and making sure that employees are treated fairly no matter where they're working across the globe from a tax point of view. So I guess from my perspective, it's is it right to say that EU citizens can work remotely from anywhere within the EU, but any of your UK passport holders within the population can't?
Yeah, that's a good question. I think it's worth understanding the complexities here and discussing how the UK citizens are now treated. What do you actually need to travel from the UK to Belgium? Well, Belgium is in the Schengen area, such as other countries, France, Germany, Croatia, Portugal, Spain. So the following would also apply to traveling to these other countries. Well, as a UK national, you do not need a so-called Schengen visa, visa C, for short trips to countries in the Schengen area. If both of the following apply, you are staying for a maximum of 90 days in a 180-day period, so about 3 months in a period of about 6 months. And if you're visiting Schengen as a tourist, in that case, you only need a valid, so not expired passport, and you don't need a visa.
Okay, yeah, that makes sense. So as a UK citizen in possession of a valid passport, no need for a visa if it's a tourist trip for up to 90 days.
Yeah, that is correct. And also the 90 days term is applicable for the entire Schengen zone. So if you enter, let's say, Germany first and then Belgium, the term does not restart.
Okay, so UK nationals are allowed to enter and stay as a tourist, but are they actually allowed to do any work whilst on holiday?
Yeah, well, the right to work or to conduct business in the Schengen area must be verified on a case-by-case basis, because you have to consider the immigration laws of each country that the person intends to be present in. And I can, of course, only speak for Belgium. Maybe at first, there's a specific category of employees with pre-Brexit rights, so taking into account the withdrawal agreement. This is a specific and limited category, so I think that will not be part of our discussion today. But for UK citizens with no pre-Brexit rights, they are not automatically entitled to work or conduct business in Belgium. As a general rule, I would say an authorization to work in the form of a work permit B for less than 90 days or a so-called single permit for more than 90 days has to be obtained in advance by the employer.
Okay, and I think that's a really interesting aspect to this actually, because what we often see is that it's the employee that needs to make sure that they have the right to work in the overseas location, given that it's driven by an employee request. But I guess if it's actually the employer that needs to make the application, then there's a bit of a disconnect there from a policy point of view. And then I guess comes back to the question around, would the employer actually want to incur any costs for something that ultimately, again, is an employee-driven request? So in view of this then, Leslie, are there any exemptions that apply that would remove the need for the visa?
Yes, there are several exemptions that may be applicable to enable this work authorization-free business travel. The most important ones, or the most relevant in this discussion, I would say, are the exemptions stemming from the Trade and Cooperation Agreement concluded between the UK and the European Union. And this includes business trips for short stay of maximum 90 days. And activities that are allowed, they are specifically listed. So you are able to, without a work permit, attend business meetings, conferences, also receiving training, doing research for your UK employer. So these are specifically listed, and that can be combined with teleworking from your vacation home or your hotel. But pay attention as well, these exemptions only relate to work authorizations. You always have to check your residence permit separately. So always keep in mind that your residence can be maximum 90 days within a period of 180 days.
Okay, so I think based on that, then it sounds like it's really important that the employer and employee are tracking where the individual is, both for personal and business reasons. But I think equally, the list of authorised activities that you've mentioned seem to align better to the work that you'd undertake on a business trip rather than remote working. So do you think it would be fair to say that we'd expect the vast majority of remote working requests in Belgium would need a work visa?
Yes, the business activities that are allowed without a work permit, they are limited. So yeah, and they are indeed more related to actual business travel and not so much related to workation or remote work. So let's say if you would remotely work from your Belgian hotel, preparing a legal advice or working as an accountant, then you would in principle need a work permit B to be requested by the employer in advance. However, you could argue, how will Belgian authorities even know that you are working from your hotel room for a couple of weeks? It's obviously very difficult for Belgian authorities to control such activities. However, if the employer has followed the rules, Belgian authorities will know that the UK employee is working on Belgian territory, as the employer has also notifications obligations. So in Belgium, that is called a limosa declaration, which needs to be done by the employer. So the UK employer must declare at the Belgian authorities if one of his employees, who is usually working in the UK, is temporarily working in Belgium. And that needs to be done prior to the employment.
Okay, so I guess you could say that if the organisation aren't filing a Limosa declaration, then the Belgian authorities wouldn't know that the individual's there.
Yeah, that's true. You could say, well, I'm not filing the Limosa declaration then, but then you should perhaps also not grant permission to the employees to work abroad. Otherwise, you are responsible as an employer for complying with the rules.
Yeah, okay, yeah, that definitely makes sense, and a lot to consider for UK nationals. Might be a bit of a stupid question, but if you've got Belgian citizens living and working in the UK, I'm assuming that they can then work freely from Belgium.
Yes, Belgian citizens are EU nationals, so they can in principle work from their home country. However, if they are usually working in the UK and not being subject to Belgian social security, then a Limosa declaration must be done for them as well.
Okay, yeah, that's really interesting, and I have to confess, not a topic that I have much knowledge of, despite working in global mobility. So for me, definitely raises the question, how could we reasonably expect someone in a completely different industry to know the rules? But that being said, on the basis that the employee does get to the right answer, concludes that they do need a work permit in Belgium, how would they then apply for this?
Well, in Belgium, such a work permit must be requested by the employer. It's not possible for the employee to arrange. It has to be done by the employer. That can be an employer abroad. So the UK employer can give proxy to a Belgian company, such as BDO, to apply for the work permit on behalf of the employer. Take into account that there are limited categories for which work permits are possible, such as highly skilled workers, where you need to have, for example, a bachelor degree. And that the procedure also differs per region in Belgium that the employee will be working. So you have Flanders, Brussels, and Wallonia. So it's quite complex, but BDO Belgium can offer assistance, can offer complete guidance up to the decision of the work permit. Also pay attention, the Belgian work permit does not automatically include permission to work in another country of the European Union.
Yeah, really good point there. And I think definitely lots of different things to consider. I'd just be again interested to know from your perspective, what would you see as being a practical resolution for managing the obligations?
Well, yeah, that's a difficult question again. You could, as a company, say in a policy that the employee has also responsibilities, that he asked permission to work abroad, that he's responsible for not violating the term of 90 days in Schengen zone, that he only performs the activities that are allowed listed in the Trade and Cooperation Agreement. So attending meetings, conferences, doing research, so that no work permit is required. That's the part that you could say that the employee is responsible of. But I think employers also have responsibilities. If you give, as an employer, permission to your employee to work abroad, yeah, then you have to check insurances such as work accident insurance, verify obligations regarding tax and social security. But also, if it's necessary, you need to ask or request a work permit in Belgium, because that can only be done by the employer. And you have to check local regulations also and make sure that you apply for a Limosa declaration, informing Belgian authorities, which also can only be done by the employer. So I think you could determine in a policy that working abroad is in principle not allowed to avoid the employer's responsibilities, but stating that the employee can work abroad at his own risk if he takes necessary actions, that doesn't seem completely fair, as it is impossible for the employee to obtain a work permit and to apply for a Limosa declaration. These things need, at least in Belgium, they need to be done by the employer.
Yeah, okay. Yeah, that definitely makes a lot of sense, Leslie. And I think from a tax and social security perspective, many organisations we see take a risk-based approach to setting the thresholds. So from an immigration perspective, I guess I'd be really interested to hear what the sanctions are for not complying with the rules.
Well, you have criminal and administrative sanctions that can be applied also to the employer. In which way? Well, you could have illegal employment in Belgium where you have a UK citizen performing activities outside the scope of an exemption without a work permit. You could also have illegal residence in Belgium where a UK citizen resides in Belgium without a valid residence permit, if he's more than 90 days in Schengen area, for example. And also for the employee himself, he could be subject to a temporary re-entry ban or a deportation, worst case scenario.
Okay, yeah, so definitely some scary stuff there, and certainly not an outcome that anyone would want. And I guess in light of this, we do see lots of companies taking a very stringent approach when it comes to the right to work, and only authorising remote work requests where the individual is a passport holder of that country, which does appear to be a sensible approach, but also considering whether this is equitable for the entire workforce, and should you make a benefit available to quite a discrete portion of the workforce. Great to chat with you there, Leslie. Very insightful discussion. So thank you again for your time. As Andy mentioned at the top of the session, if anyone does have any questions, please do enter them into the chat and we'll try to get to all of them at the end of the discussion. But for now, over to you, Simon.
Well, I'd like to say thank you, first of all, to BDO for giving us the opportunity, myself and ITX, to come and have a chat to you today about all things GEC and GEC. Essentially, we'll go into a little bit about the operating model as we go through. It's a very short presentation on what is quite a big topic, particularly at the moment. So, generic answers and technical questions, we can probably park those and deal with them a little bit later, Andrew. So we'll get into just the basics of what it is around the GEC. I'm Simon Davies. I've been in international corporate mobility for over 20 years, lived all around the world and thoroughly immersed and enjoyed the journey we've been on, and none more so than the change that we face right now, all of us together. Some of you may be familiar with what the GEC is, or the Global Employment Company Model. Some of you may even have a GEC in place currently, and some of you may not be aware of what it is, or maybe think it's something else. So we'll cover some of that as we go through. Let's have a little look at our agenda, please. So we'll get into it with a very basic understanding of what the GEC is and why it's going through something of a renaissance right now, and why we're seeing companies looking at this as an alternative, a viable alternative operating model for their cross-border and international global mobility in the global mobility space. We'll also look at what some of those companies, who they are, and sort of the types of companies that would use a GEC and put one in place. And we'll also cover some of the common misconceptions, because there are many, and the GECs have been around for many, many years, but with that comes often confusion. So we'll try and put some of those out there for you today. And then in terms of the operating model and procedures, we'll quickly have a look at kind of a comparison between a home host methodology and the way that the GEC manages this, by comparison, to give some simplification of what it does in terms of operating. And then just before I hand back over, we'll talk about how BDO and ITX currently are working together and synergizing with and embracing change as we all, as I say, move into this new chapter for global mobility. Thank you. So the GEC, and again, some of you will have an understanding of what it is, but just to take you through sort of the really basic understanding. It's a legal entity that's owned by your own organization. It belongs to you. It's set up as a separate entity, a legal entity, and it creates a much more centralized and simplification of your global mobility program. Your assignees are legally employed by the GEC through one centrally controlled location, and that can depend on the setup of your organization, where the GEC is actually put in its initial, once you've completed the feasibility, we'll work out where is the best place for the GEC to be. Popular locations include Singapore and Switzerland, and some in Ireland, Netherlands, and previously in the UK, but post-Brexit, that's actually changing a little bit, and people are looking at other ways of locating the GEC. Essentially, it's about simplification of the mobility process, and as an operating model, we'll get into that comparison as we go through. But most of all, it really does highlight clear cost control and is fully compliant with all legal legislation and regulations around the world. Why companies are looking at this more at the moment? You know, with the change that we've all gone through, and the need for us to be able to tackle the remote working, the way that the new trend of global mobility is shaping up. Our organizations are looking at being more agile. I know we talk about it a lot, but the global mobility, the GEC provides you with an opportunity to be have greater agility, control, and visibility of what you're doing, as well as controlling cost, of course. And so this is something that companies are looking at, and now the GEC as a result is re-emerging as being a genuine consideration during planned global mobility and HR transformation that any company may be looking at. I'll talk a bit about this shift a little bit later that we see, which is really about the simplification of what is essentially quite a complex established way of moving people around the world in terms of the home and host methodology that many people use. Thank you. Countless global organizations, Fortune 500, household names, companies that we all work with today across a wide variety of sectors. It's simply not just the oil and gas companies, which pretty much many people, as one of the misconceptions we cover, think that it belongs to. No, the GECs are set up and managed and owned by multiple different companies across all different industries, from farmers to technology, finance, insurance companies, banking, everything. So the whole world over, companies with different industries can set up and enjoy the benefits of having a GEC. It's not always easy to put those names of those companies up there. So we just tell you that you know, we have a GEC network club. It's full of lots of international companies who join and share the knowledge of some of the benefits that they get from their GEC, and then they share that as well. And there are multiple, as I say, multiple household names of companies that join that group. Thank you. This really is something that we've seen change in recent times with the types of organizations, as I say, who are coming to us. I think that previously the GEC was, maybe there'd been some misconception about what it was. We do get a lot of companies that come and talk to us about thinking that we are in an EOR, or employee of record, and that's actually one of the main challenges that we have, is to try and educate global mobility around what the GEC does and how it operates and how it works. And so, you know, sharing what other companies in their industry are using a GEC is often a very, very good way of being able to assure companies that looking at a GEC initially, going into feasibility of whether or not it will provide them with the solutions to the challenges they have in their organization, whatever that might be, gives them the assurance that, that the GEC is actually a favorable option going forward. So, that's done typically through an initial discussion, and then we will go into a phase of looking at feasibility, and those companies then will engage an organization like ours to conduct a thorough feasibility study. And from that, we'll be able to give a roadmap to the organization about how the GEC will work for them, how it will meet their needs, the needs of the business going forward. And then we will then go into set up of the GEC for that organization and training and so on, and get the GEC up and running for the company. So ITX is really the conduit to manage that process and that change, and not actually the GEC itself. Once again, that global employment company is wholly owned subsidiary of the organization itself. Thank you. Some of the misconceptions I mentioned along the way, there are a whole host of them, mostly, as I said, that the GEC is in fact an EOR. In fact, that is not the correct understanding. The two really operate quite differently. And so, that's often the one that we find we're faced with the most of the time. There's a number of others on here. There are countless more. It doesn't necessarily, need to have a big team of people. We can put just the executives of a company into a GEC, for example, for some confidentiality reasons. A GEC may be managed internally or externally by a separate company. And there are lots and lots of misconceptions around the GEC, which we all iron out and work through with our clients. Thank you. At this point, I just like to think. I think we can run a poll actually. If we could, Francesca, could I just ask you to run that poll for us? I think we've got a poll to run. Yep. Okay, so the GEC poll. Based on your current knowledge of the GEC, do you think that your organization should explore them in more detail? So really trying to find out whether or not people want to look at this in more detail. So yes, yes, I don't know much about the GEC and I'd like to know more. Yes, but it would be discussion perhaps for next year, or no, I'm not familiar with the GEC and I don't think they'd be right for our business. Which would determine that you already know what the GEC does, of course, and of course, finally, that you already have a GEC in place, and therefore wouldn't need to consider looking at it. So we'll just ask you to vote on those. Thank you. Excellent. So yeah, that's interesting. We'll come back to that, I think, at the end, in the interest of time. I just wanted to show you a little bit here about the operating differences between the GEC and the sort of more conventional way. On the left-hand side, the home host methodology, some of the costs associated at corporate tax considerations, the need for more data, lack of economy of scale, risk around PE, data integrity, lack of access to consistent skills and service levels, and also in terms of agility, you need more coordination to manage this process, more headcount, and there's complex rebilling processes as well, and also, of course, a time lag in terms of your strategy and execution of running that method, opposed to perhaps the GEC side, where the GEC sits central to the central hub, the centrally controlled home for your expatriate program, one wholly owned subsidiary from the group, or even one of the branches of its own legal entities can be set up as the GEC. You can put mobile employees in there, remote workers in there, senior executives, as I mentioned, are all employed by the GEC and deployed to overseas subsidiaries from one place. Consolidation there of headcount, in one place, centralization and consistency, visibility of critical mass. So all of these things are really appealing to these kind of companies I showed you, and a reduced number of entities around the world, deploying entities, employees all around the world and across borders from one centrally controlled location. And so there's clearly, thank you, clearly a big difference in that. And when we look at that, the left-hand side with the amount of permutations that are created from managing a process like that, it's actually quite a nightmare compared to a much more centrally controlled, simple operation as is a GEC. Thank you. Handing back to bringing Andy back in. ITX and BDO, we've actually started to work together on some shared opportunities where we come in, where some of the BDO clients are looking at this different operating structure and interfacing with them around their expertise in terms of their tax advice, immigration advice, and for us coming in, and my colleague Mario Ferrero, myself, coming in and looking at the feasibility of setting up a GC initially, and then how we take them through that journey as in partnership with BDO, actually off to a really good start, and some great conversation content coming out of some of those engagements that we're finding. Andy.
Thank you there, Simon, for covering the insight into GCs. So could I have the next slide, please, Francesca? So just to really cover that, we very much don't see that that GECs or global employment companies are specifically tax motivated. There's a myriad of reasons and factors why companies would wish to use them, but it just so happens that some of the aspects that result from them help to streamline the handling of some of the tax and social security issues. So as a single employment entity, it helps to ring fence some of the permanent establishment or corporate tax present risks that may otherwise apply if you've individuals seconded from many different entities. It allows for a consistent transfer pricing approach, which again makes some of the administration and policies to be applied for corporate tax reasons much simplified. And lastly, from a social security perspective, just by nature, many of the countries for which GCs are established in are not territories where there is either a system of social security or a high social security rate. And that basically allows an efficiency in terms of the home country social security and not making it a burdensome process to get the social security in the country in which the entity is established relaxed to facilitate the process. From an income tax perspective, again, we don't see some of the complexities of having to apply for income tax withholding to be relaxed by the income tax authorities in the country in which it's established. At that point, I will pass over to Lee to pick up on the social security developments.
Thanks, Andy, and good morning, everyone. I'm Lee Caccaro. I'm an expatriate tax partner at BDO, also specialised in advising on international social security. So as Andy alluded to, I'm actually going to be going through a relatively high level some of the new rules that have come into place for teleworking, and specifically within the EU and EFTA countries as well. Let's just remind ourselves, or for those that aren't aware, there are already EU EFTA-wide social security regulations that have been in place for many years, actually. So the new rules that largely came into play from 1st of July 2023 are effectively an addition to those pre-existing regulations. Just a bit of backdrop as well. This heightened, I suppose, the teleworking arrangements that we're seeing, that was heightened during COVID for obvious reasons. And then we've obviously found this new way of working where it's much more prevalent. There was a relaxation of the pre-existing rules up to 30th of June 2023. And therefore, these new rules, or this new addendum that's come in, is going to apply from 1st of July 2023 largely, and it is effectively formalising what was already in place beforehand. If you could just flick on to the next slide for me, Francesca, that would be great. So, as I said, there's this multilateral framework agreement that's now been brought in to formalise some of these rules around teleworking arrangements. There are obviously more countries within the EU and EFTA than are shown on that slide, and that's one of the first things we need to bear in mind, that actually, as things stand today, not all the countries have adopted these new rules. So they only apply to arrangements for teleworkers that are working between the countries currently shown on that slide. And other than Slovenia, that signed the MFA from 1st of September 2023, all the other countries, the rules, or the MFA rather, applies from 1st of July 2023. If you could just move on one slide again, thanks, Francesca. I think it's worth just spending 5 or 10 minutes just working through some of the key points around these rules. They've not been in place for too long. Maybe no one's really looked at them or implemented them yet, those that are on the call at the moment. So let's just work through what they're intending to do. Well, as I mentioned, there's got to be a teleworking arrangement between 2 of those countries that were shown on that list on the previous slide. Otherwise, we default automatically to the pre-existing underlying rules. It really should only apply to work that's being carried out in the country of residence and the country where your employer sits. So it's really looking at the position where an employee is working between those countries, and it says on a frequent basis or regular basis. Now, that frequent basis isn't defined in the guidance. So this is one of the first things that's going to need to be looked at when you may be looking at teleworking arrangements, is what does that actually mean? So do bear that in mind. And who's it actually meant to cover? Well, it's to cover those individuals that we'd already call multi-state workers, really. So we're up into the 25% plus of time being worked in your home country and the other country as well. But actually, it kind of extends that threshold. What it's saying here is that if you're working more than 25% of your time in your country of residence, but under 50% of your time overall in that country, then actually you could pay in the country where your employer is sitting, because the traditional and underlying rules would state that actually you pay in your country of residence. So that's quite a big shift from moving your social security liability for both you and the employer, or the employer and the employee rather, from the country of residence to the country where the employer sits. Now, it's still noted that the employee should spend the majority of their time working in the country where the employer is. So this is to cover teleworking arrangements. It's also worth bearing in mind that both the employer and the employee must agree to apply this multilateral framework agreement. If both don't agree to apply it, then we fall back into the pre-existing underlying rules again, and probably for these sorts of arrangements, the liability will sit in the country where the individual is resident for both employer and employee, and not in the country where the employer sits, and probably therefore the payroll sits. If we could just move on, just one more slide. Thanks, Francesca. So some other key points just to bear in mind. Teleworking does mean that. It means that you're working remotely via a digital link you have with your employer. It's not intended to cover remote working where, for example, you may be physically working on site and doing a manual role. It's not to cover those arrangements. However, teleworking doesn't have to be at home. It can be teleworking in another office in the country of residence, but it must be via that digital link. We're still using A1 certificates. So just to recap on that, an A1 certificate is applied for and effectively formalises where social security is payable across the EU or under the EU and EFTA guidance. You must still apply for an A1, and generally at the moment, under these new rules for teleworking arrangements, they won't be issued for a period of more than 3 years. They can be extended. Do bear in mind, of course, they also need to be reviewed as well to make sure they remain relevant. Just because a certificate is issued for 3 years doesn't mean it may be relevant for that full 3-year period. The application must be made in the country where the employer is based, because the employer and employee are applying to pay in that country. So again, do bear that in mind. There is a chance to apply for retroactive applications. It's recognised that these are new rules, that businesses and individuals are getting their heads around them, and there's effectively a period of grace for a year for most of the countries, or 9 months, I think it'd be for Slovenia, where an A1 can be applied for up to July 2024 to regularise a position that may already be in place back to July 2023. One of the caveats on that is that it cannot alter the pre-existing social security position. So really what we're saying is that application should be made to pay social security in the country of employment where social security is already being paid in that country. It can't unwind that, but you can't unwind that by making a retroactive application. From July 2024 going forwards, you're probably going to have 3 months maximum to make that application. So what are we really looking at here? What's trying to be achieved with this? Well, it's trying to make it a little easier to recruit and retain teleworkers and to facilitate teleworking arrangements. Because largely for an employer, having the employment contract, the payroll, and where they're paying social security, all sitting in one place is far easier. Largely these arrangements, pre these rules coming in, would say that the employer and the payroll will be sit in the country where the employer is, but there is a social security withholding obligation in the country of residence. Do bear in mind, however, I'll just refer back to the point that the employer and employee both need to agree to apply these rules for that position to be in effect. So that's worth knowing. Also bear in mind, just bringing in some of the other points that have been raised already, social security is only one complication for cross-border multi-state teleworking arrangements. Simon and Andy talked about, employment and where employers should sit and employers of global employment companies. There's still the tax position to consider. We're purely talking about social security. Tax rules are different. Largely for teleworking and cross-border arrangements, you're probably going to have tax due in 2 countries, and therefore you still have that payroll obligation as an employer, probably in both countries, irrespective of where social security is sitting, to withhold tax properly. Going back to the first part of the presentation as well, just thinking about work permits and right to work. The company still has to make sure the individual is legally allowed to work in the countries in which they're in as well. So addressing the social security position is great, and it does simplify things to a certain extent, but there are all these other issues to bring into play as well. I think it'd be useful, Francesca, we're just going to bring the poll up now. It'd be useful just to understand, just an answer to the question that's going to come up, just to find out sort of what the level of awareness is around the teleworking and change in arrangements for July 2023. And for those of you who are on the webinar today, what your understanding is. So please feel free just to answer now. I'll just give you 20 seconds, 30 seconds or so. So Francesca, whenever you're ready and we've got the answers in, if you could just provide the response, that would be great. So that's probably not surprising, given that it's a relatively new arrangement, and maybe not many, if any, have implemented it. It seems a few have, of course. 7 of you that have answered have actually, looks like you've looked at it already, but largely it looks like some more information will be useful on this. So we will take that away because it's very handy for us to understand where businesses are and where they might need further guidance. So at this point, I think we're going to hand back to Andy. We've got some time for Q&A still. So Andy, I'll just hand back over to you.
Thank you very much for Lee. Yes, just to open up to the question and answer section to our presentation. So I've just been following some of the submissions that have been coming in. So thank you to our audience for submitting those. The first question I'd like to pose to Leslie. So Leslie, a question came in, which was, would the employer need to have an entity in Belgium to arrange for a Belgian visa?
No, actually not. So it can be an employer abroad, but then he has to give a proxy to a Belgian service provider, so a Belgian company such as BDO, to apply for the work permits, the work visa on behalf of the employer in the UK. So you do not have to have a legal entity in Belgium.
Great. Okay. Thank you very much for responding on that, Leslie. So next up, there is a question that I will put to Simon that's come in relation to global employment companies. And the question, Simon, is, do you need to have hundreds of international assignees to set up a global employment company?
No, very fair question. Actually, on the contrary, you can actually have, we've got some clients with us. I think one of our clients has as little as 16 individuals in the GEC, ranging all the way through to thousands in the GEC. So clearly we're seeing smaller numbers across global mobility in terms of those expats are declining. So the GEC can host, can manage as little as 20, 15, 20 people. Yeah.
Okay, thank you very much there, Simon. The next question I've got is in relation to Social Security. So if I could direct this question to yourself, Lee. So obviously the question says you covered the Social Security change of rules. Is there similar changes happening in relation to the tax rules?
Yeah, again, a good question. And yes, I'll refer back to something I said, Social Security and tax rules are different, but we are starting to see some alignment in terms of how countries are operating. So I know, for example, Switzerland have updated or revised their tax treaties with France and Italy around how they're going to tax remote workers, teleworkers, both to ease the burden and facilitate cross-border working, but also making sure that both countries get their fair share of the tax take. And also in the US as well, we're starting to see some states levy tax for remote workers where perhaps the employer is in one state. New York's an example of this. The employee lives and works in another state, maybe New Jersey, but they are still being charged New York state tax because of where the employer sits. So it's starting to filter through.
Okay, thank you very much there, Lee. The next question we've got, so this is another one on Belgian work permits. So if I could direct this to you, Leslie, and the question is, what is the cost of applying for a Belgian work permit, Leslie?
The administrative fee for the Belgian authorities, that is only like 138 euros, and that needs to be paid prior to the application. Of course, you have also if you need BDO as a service provider, there's also a fee for applying for the work visa. But for the Belgian authorities, that's only 138 euro.
Oh, okay, great. Thank you there, Leslie. So I'll pick up one question that came in relation to global employment companies, because the question is, how does it get round the permanent establishment risk? So just to be clear, it's not necessarily that it gets round the permanent establishment risk. It's just, if you imagine international assignees, let's say going to India from 10 different countries, you then potentially could have exposure to permanent establishment risks in relation to each of those home country entities in different countries that are sending people to India. So you could have a myriad of numbers of different analysis you have to complete for each of the entities, and you could have a number of different resulting filings that you have to do for different entities. The other aspect of that is the fact that sometimes there's real concern that you don't want specific entities to generate a permanent establishment because of the subsequent apportionment of profit that you need to give for corporate tax purposes. So it's not a way of avoiding a permanent establishment risk. It's a way of effectively ring fencing the permanent establishment risk, because typically you'd only have to look at what the permanent establishment risk of the global employment company, and you typically can ring fence the issue so that by looking at the global employment company, you're not having to look at the profits of a trading entity that the individual may have otherwise been seconded from. So hopefully that clarifies the point in relation to that. Okay, another question that came in for Simon was, Simon, it was addressed to you, but I guess if any of the other audience members wish to pick it up, it says, what do you see as the top? What do you see as top of the agenda for global mobility with a view to 2024 and beyond?
Right. Well, I'll do a very quick analysis in a couple of things. One is more collaboration. I'm seeing greater collaboration particularly from strategic alignment with suppliers. We're seeing a big change in them. We're evidence of that ourselves, but we're seeing a big change in that space. And also we ran a recent poll earlier this year where we asked this question, and the main headlines that came out of it were simplification, human resources becoming more strategic, integration internally, businesses working closer together across the company, finance and technology. So they're really the main things that are leading change from what I'm seeing, Andrew.
Yeah. Okay. And I'll just put that as an open question out to any of the other panelists we have, whether any of you want to share your thoughts on what some of the key agenda items for global mobility professionals may be for 2024. I don't know if anyone wants to put up a hand to respond to that question.
Yep, certainly, Andrew, I'm happy to give my view on that. And I think certainly being people focused will continue for 2024. And I think that now we are very much getting back into the state of normal, where people are traveling again, and just making sure that we are having the right interactions. And I think even from a domestic perspective, and where we've got a lot of remote contracts that were signed during COVID times, but how do we make sure that people feel part of the organisation and, you know, focus on culture within the organisation as well? And I think from my perspective, we'll see again more and more assignments happening where people actually want to be around other people for fulfilling that assignment. So that would be my view for 2024.
Thank you very much, Laura. Anyone want to add any comments to that? Okay, so I'll go on to, let's make this the last question. So there was another question that came in just in terms of workable solutions for contractors spread across many different countries. And I think this is one practical way in which ourselves at BDO have actually experience of working with ITX. So we've worked with organizations that have been very concerned that they have a large number of contractors spread across different territories, where there was significant risk that those individuals could be considered to be employees. And obviously, as in the UK with IR35, this is a heightened risk where tax authorities may wish to recategorize and badge individuals as employees, which often results in exposure to withholding obligations, to employment tax, and also corporate presence risks. So this is a live area where we've been working with companies where they may wish to be considering sales or IPOs, and that risk of having a large body of global contractors that probably should be more appropriately categorized as employees, and recognizing a easy, streamlined way of bringing them under a single HR and employment platform is a way that we've adopted that. So yeah, that is an instance in which BDO has a lot of experience of working with ITX. Great. Well, look, that brings us to the end of the webinar today. Thank you very much for dialing in and participating. Thank you also to the panelists from both BDO and our guest speaker, Simon from ITX. You'll see all of the contact details for the panelists there. We will be sending to each of you a follow-up copy of the slides and access to the recording. And we will also be contacting you when we are organising future events on a selection of relevant global mobility topics. So please do stay in contact with us. Please do let us know if you have any follow-up questions, and thank you again for your participation.
Thank you.
Thanks, Andy.
Thank you.